market conditions, majority bullish. S&P futures up 0.5% this morning after some inflation news that just came out about 15 minutes ago. We'll take a look at that price pattern here in just a moment. We've got expanded trend, upper end of the range. We're not quite back to all-time highs, but getting close to that. Today's data could push us a little bit higher there as well. We're seeing on the weekly time frame expansion of trend, all-time highs. Again, we know that scenario. We know where we're at in the trend. We're at the upper end of the range. The issue is now managing the risk of, are we going to consolidate and retrace? Are we going to pull back, find some support? Are we going to break out from here? Or are we just going to kind of continue to slug higher on price activity? That is, that's kind of what all we can do is say, where are we at right now, and what are we dealing with? Where have we been in this case, and what are some of the potentials that could unfold? That's kind of the state of the market right now. Majority bullish, but consolidating towards the upper end of that range as markets may be waiting for a little bit more catalyst, whether that's a number like today or whether that's more earnings that are going to be coming out. It's always hard to know exactly what the catalyst may be that'll move the overall market. But let's take a look at some of the other internals. S&P 500 stocks above the 50-day moving average, still middle of the road, not fantastic here at 53. That's not solid breadth, meaning what we would like to see for a good solid uptrend, particularly when we're at the upper end of the range, is for us to be the majority of those stocks trending higher, 80% or higher. Right now we're 50%, which means we've got about 50% trending lower. So the internals, that means that inside of the S&P 500, you've got a handful of stocks, half of them now, so more than 200 stocks that are trending down in below their 50-day moving average. That's going to be a weight on the overall index as a whole, because again, it's 500 stocks and all 500 have to be participating for the most part to be going up. The bullish side of that is that there may be half the stocks that are finding support and could be getting ready for a move higher, while the other half are already in uptrends, or the half that are in uptrends start to get weak as well. So it's kind of in that middle of the road zone right here, and that's showing up in price activity as well. You get a little consolidation towards the upper end of that range. VIX pulling back 1521. Majority bearish to the downside. That's bullish for stocks, continuing that overall theme here as well. And Dow Jones Industrial Average still working towards the upper end of that supply location. Here, this supply block here, this entire red area, the weekly time frame, you can see that a little bit more clearly where we're pressing up against that, and we could get a breakout to the upside here as well on the Dow, or we could continue to retrace, pull back to see if we have demand at the 236. Triple Q's also continuing to show strength, has yet to really have any meaningful pullback. A little blip right here on the pullback, just huge demand still in the market. This is a good indication of that, where we can't even get back to the 236 with the market. It just keeps continuing to move higher. Any little pullback at all is still getting a bid, still getting buyers coming in at these levels. Small cap names, Russell 2000, still showing relative strength overall to its current price structure. A pullback to the 236, that's also a demand type pattern that we would want to see. That's what we expect at that area, is for demand to come in at that area first. If that doesn't hold up, this next rung in the ladder is the next area, then 50%, then 618. By the time you get down to the 618 location, that's often fresh demand, because there's no more supply. Everybody's sold that's going to sell, and so if there is demand, that can pull back in. That's in a deeper corrective zone, but we're not there yet. We're still nicely in momentum. USO, which is the ETF for oil, majority bearish now, and pulling back 50% retracement. We'll see if it does find some demand here at that 50% area or the 618. Oil pulling back as well. That's in terms of the overall economic perspective. We want to see oil pulling back. That acts like a lowering in tax. It's just a lower of the fixed costs for enterprises that use a lot of oil, which is everyone now. Even clothing, everything, plastics. It's all made from oil, and so the price of oil affects everything. So that's one of the reasons why we want to just keep a general eye on what's oil doing. And this is the ETF, so we're not getting a true, pure perspective of what crude is doing, but this gives us enough information to say where are we at, what's oil doing in this overall trend. Gold also, we cover this to kind of be that flight to quality, that flight to safety. If there is any kind of panic, is the market panicking? They're panicking about something, or they truly believe that there is a reason to hold hard asset of gold as it's continuing to move higher. It's typically because of an idea that the dollar is weakening. So you're seeing the dollar weakening here as well, but kind of stabilizing towards the bottom end of that trend. These are the bottom end of these analysis are a little bit more broadly economic data. The 2-year also, we're looking to see where we at in the 2 and the 10-year. That's really that's the lubrication of the economy is debt and borrowing rates. How the cost of borrowing. Think about your own individual lives and the cost of your car loan, the cost of your credit cards, the cost of your mortgage. Okay, the money that we are having to pay to borrow money individually, it works the same way. And even is multiplied with corporations as well. So if interest rates can be lower, obviously that's more incentive to borrow more money, put that capital to use, deploy it, grow businesses, things like that. So, but the trade-off of cheap money is inflation. Okay, so we've seen what cheap money does. This is the 2-year back here in 2021-22 when the cost of capital was next to nothing. And then we had COVID, everything took off. Then we had inflation. So as inflation was rising, we needed interest rates to go higher. Again, that's the brakes, putting the brakes on the economy to say we need to stop the growth because inflation is getting out of control. This is how the Fed does that with interest rates. And this is really, the bond market is and the Fed are all they're all kind of linked now, and so we want to pay attention to what's happening in the bond world as well. 426 on the 10-year, still relatively stable, majority bearish in some of the shorter term price pattern. And then the overall yield curve. When we're looking at that yield curve, anything less than this yellow line is inverted. That means the 2-year is paying more than the 10-year. And in this case, it's not inverted. We're moving towards the upper end of that range. Now, I did include this chart here because this was the number that just came out today. And this is core inflation. So we're at 2.7%. The market liked that. It was relatively flat, but now it's popping here this morning at 2.7. So you can see where inflation was all the way up at this 9% range and down in these ranges. If we go over to this chart and go back to see where has inflation been at historically, we can go all the way back to the 1950s and 40s. Here was the 80s. I was born in 73, and I remember as a kid in the 80s, we were always talking about inflation and just, strange things. I remember that those rates were quite high, cost of borrowing. So we had a real spike with COVID, but now we're back. The Fed tries to keep inflation numbers around 2%. So we're right around there. Markets were happy with that number, 2.7%, something of interest potentially today. Let's move along here. A couple stock ideas to consider. NUS having a nice confirmation bar into momentum, increased volume, and then also saw LAR, which was an interesting name, just in the lithium name, and a good confirmation bar, one to consider. Maybe do a little bit more homework on that name as well. That'll do it for today's update, everyone. Thank you very much, and have a fantastic day today.